Welcome back. Still watching Business Morning live from Channels HQ. Now to our next conversation. Last week, the investment research arm of Afrinvest West African Limited launched the 17th edition of its annual Nigerian banking sector report. The theme, Brace for Impact. Report x-rayed how the Nigerian banking sector has fared in an economy yet to fully shrug off the aftermath of the pandemic. To get more insight now, we have Damilare Ashimiyu, macro strategist, head investment research at Afrinvest Research and Consulting, join us live. Great to have you on the program.
Good morning.
Morning. So let's start this way. Looking at the theme, you know, the banking sector report here, it's a brace for impact. Can you summarize the thoughts, you know, behind this year's theme?
Thank you very much. So the theme of our 2022 banking sector report is actually the pillar strength of all our forward-looking recommendations, both to the players in the banking industry as well as to the general economy as well. And the reason for making such decisions is not far-fetched. The banking sector is a strategic bridge or link in every economy. Talk of from the point of matching a deficit economic agent to the surplus one in terms of mobilizing loan and giving out credit. Talk of the implementation and effectiveness of monetary policy or fiscal policy when the CBN is thinking of pursuing aggressive tightening like what we're seeing now. It goes through the banking sector. If the federal government is thinking of maybe an expansionary monetary policy, like some of the stimulus injection we saw in 2020 during the pandemic, it still go through the banking sector. So the banking sector is a very important bridge between every agent of the economy. So why we think this year's report, Brace for Impact, is that in our analysis of the trend in the broader economy, especially in the last decade to 2021, we analyze that in the context of how banks have performed and what we expect going forward. Now, the key interesting thing we were able to get from our analysis is the fact that in as much as the business environment has been very challenging, you know, banks in their own capacity have, you know, remained resilient, have continued to give their best to deliver on optimum performance. But again, there is a limit to which the banks can do because the bank is a subset in the big set of an economy. And we've seen how so many economic fundamentals have weighed on banks' you know, performance capacity over the last decade. Like I mentioned, inflation between 2012 and 2021, the last financial year, has risen about 191%, so to say, and this had significant impact on both the gross earnings and profitability of banks. In fact, in terms of cost, in the last 3 years, we've seen banks' cost of operation, the industry's cost of operation, rising in double digits, which is, you know, not very good for their bottom line. But in all this stress, right, we also have exchange rate effect. Now banks are not getting enough FX supply from the central bank, unlike what we used to have up to around 2014, when on an annual basis, what the CBN used to inject to the bank to meet FX need and international settlement through the banks, from which the bank also make trading income, have reduced significantly. That what we see now is that the CBN is rationing, and the demand across, you know, the banking as well as other financial services space is very high. So now, putting all this in context, the inflation dynamics, the exchange rate dynamic, the insecurity dynamics, well, like we captured in our 2020 BSR report, which we titled The Insecurity Challenges of Poverty. When there is high poverty, there's high tendency that there will be high insecurity. And when there is insecurity, banks are also not spared. I mean, a lot of banks have shut down some branches because of insecurity concerns. So these are some of the fundamental factors that we have analyzed going to the future. And we've seen that more effort has not been put in place now to resolve this problem, which makes the forward-looking expectation for the banking industry to be a bit challenging, more challenging, especially as we head into 2023, which is also an election year, and a lot of uncertainty is around the year. But we believe that with the message we have passed to banks that they need to brace for impact, they've done it before, they've been resilient. We have gone through two different recessions in 2016 and 2020, and the Nigerian banking industry kept delivering impressive performance, even outperforming the broader economy despite the numerous challenges. So this is just like a wake-up call for the banking sector and even for the Nigerian populace as we head for the polls in 2023, that for there to be a transformation, for there to be a revival of everything that has gone wrong in the economy, irrespective of who becomes the next Nigerian CEO in terms of president, every reform that will come to fix the economy, to put the economy back on track, will come with some slight pain, but it will be good if you get it right with the leadership, because it will be temporal. Then things will get better going forward. So these are some of the major things we highlighted in the report, and a lot of recommendations for both the banking industry as well as the general populace.
All right, Damilare, but do you think the banks are bracing for another impact of this Naira redesign? You know, that's is going to bring a lot of people to the banking halls at this time.
Yeah, so ordinarily, this is actually one of the things the CBN intends to achieve, right, by this policy. The claim is that there is a lot of currency in circulation. The CBN put the number at 85%. Though in our own analysis, we actually saw that that trend has actually been existent for long. If you analyze CBN data on currency outside of bank as proportion of currency in circulation since 1960, the trend has always been there. But what the CBN perhaps are trying to, maybe let me say the biggest point that the CBN put forward this time that we feel is more justifiable in all the reasons for going about with this currency change plan is the fact that there are a lot of counterfeit currency outside, right? Though the CBN didn't put any numbers there, but if there are a lot of counterfeit currency in circulation, there's a national security threat. And we feel from that perspective, it may not be a bad thing. But when you look at it from the banking industry player, now this is going to exert a lot of pressure on them. And in the CBN announcement saying people will even have Saturdays to them to come to bank and deposit all these old notes, you ask yourself, the CBN does not make any provision for how to compensate bank on the cost pressure that will come with this extra day of work, because now it means bank will need to deploy, bring in their staff to work for extra days, and even if it's contract people that will do that, that's an extra cost. These are banks, many of whom have started shutting down 4 p.m. these days because of high cost of energy item. I could recall earlier around February, March this year, we saw a lot of circulars from different banks announcing that they'll be shutting down 3 p.m., 4 p.m., depending on how they have viewed the weight of their costs. So these are some of the costs that banks will see. It will stretch them in terms of cost of operation. It will also stretch the banking staff. But again, if this is a sacrifice the CBN thing need to do to mop up back currency in circulation, as well as taking away a lot of money in circulation that is making their policy not to be effective, though we differ a bit because we feel that the so-called amount we are trying to mop up in the economy is not as huge as other factors that are driving the high inflation level. So we have about 3.4 trillion in circulation in terms of cash in circulation, but we have a lot of deficit financing from the CBN that is running, north of 20 trillion, broad money in excess of 49 trillion. And so basically, if you look at it from the point of broad money money circulation to broad money, perhaps Nigeria is actually already a cashless economy because that ratio is very thin, not to even talk of comparing in terms of ratio to GDP. But the point is that it doesn't take away anything from the CBN's effort to take out the bad news and to ensure that the money in circulation are within the confine of the banking industry for the efficacy of monetary policy.
Okay, and last week we saw, Moody's, they did give some downgrades for some, financial institutions and non-financial institutions, but for the banks, about 9 tier 1 banks were set for downgrade by Moody's. How do you see that?
Yeah, and that's why I mentioned earlier that banks are subsets of the happenings in the general economy. You recall that Nigeria's long-term credit rating also was downgraded, I think about a week and a half ago, right? So because irrespective of the effort of this institution, they are still limited by the growth strength of the economy and the dynamics in the macro environment. And I'll paint an example. If you look at gross earnings of bank in nominal term compared to the base year, let's say 2012, last year, based on our banking sector analysis, gross earnings of Nigerian banks was about 5.6 trillion in nominal term. But if you discount that value by what has happened to inflation over the last 10 years, right? The gross earnings of Nigerian bank in 2021 is actually about 200 billion short of gross earnings in 2022 in real terms. So in 2022, gross earnings was about 2.1 billion. But because of inflationary effects, that has eroded it. Same thing if you look from the perspective of capital base of bank. After the capitalization exercise in 2005, regional banks' capital base was put at 10 billion, national at 25 billion, and international at 50 billion. Now, if you look at what has happened to Naira to dollar exchange rate over 2005, this is talking about exchange rate valuation, right? For the national banks, regional banks now, to have a capitalization that is strong, like the level in 2005, when you convert it to dollar, then that regional capitalization baseline should have increased to 33 billion. That of national bank should have increased to about 66 billion. That of international should have moved above 100 billion. So that shows you that, because when Moody or any of these foreign agencies want to rate the Nigerian bank, they rate their capacity, their assets, the value they're able to create, the wealth they have with them. They rate it in the context of the global standard. And what is the global denomination that will be used in assessing this? It is the dollar. And when you look at the value of what Nigerian banks have done in terms of gross earnings, profitability, and what have you, by the time you discount it in dollar terms to compare favorably with other banks across the world, you see that the banking sector truly is going through a lot of tough time, which might actually not really change anytime soon, given that we have not seen so much effort to address the root cause of some of these fundamental factors that are affecting the banking industry.
Right. So much there for the banks to actually deal with at this time. So many headwinds. Thank you so much, Damilare Ashimi. You head investment research at Afrinvest. It's great having your perspective.
Thank you for having me.